Well, hey folks, it's Jeff Camarda once again. Thanks so much for watching, and I wanted to offer a bit of clarity about my last video. I'd like to begin by saying one of our really long-term clients, really from the very beginning, who's become quite a close friend, was in the office a couple of weeks ago, and he said, Jeff, I never see any videos from you anymore, and I see this one, and then Troy and Jonathan and so forth, and he goes, those guys are great, but they're not you. And I promised that I'd make more of an attempt to be more visible and share my thinking with you, and now that I'm finally finished with Georgetown, thank goodness, huge blocks of time have opened up for me, so I'm going to really try to be more regularly informative to you via video and so forth. So I wanted to follow up on my last video, which was about the cash and the potential debt ceiling crisis and so forth, and clarify a couple of points that I think are important. I'm really talking about what is Camarda's long-term investment strategy. What are our objectives? What do we see coming? And how does it help you to achieve your family wealth goals? And again, I remain convinced that the stock market, which could turn on a dime, eventually it's going to shoot up dramatically. We watch it pretty carefully in order to try to be attentive to that and be able to move quickly, but still is in a kind of a tenuous state. Valuations are stretched. Interestingly, at the Berkshire Hathaway Buffett big annual event over the past couple of weeks, Buffett is still sitting on huge piles of cash, thinking that stock market valuations stretched, overvalued, things will get cheaper. I agree with that. But it's important to realize that cash itself, and I think this may have gotten lost in my last video, cash is not an investment in my view. It's a placeholder. It's a holding pattern. It's a place to take refuge while we look to avoid significant risks and wait for better opportunities to come up. Because we have to, in order, going forward, I think it's fairly obvious. Inflation is going to be, at least a midterm, if not a long-term problem. Still running over 5%, particularly wage inflation that people, the salaries and cost of employing people are going up. Taxes will undoubtedly, in my view, continue to be a significant drag on wealth for the folks like you that have had the financial success to be interested in watching this video. And in order to overcome that, we really need to make more money than cash will ever provide, right? After taxes and inflation, 5% is still going backwards. Although that's pretty good on cash, what we're getting typically in T-bill money market funds. But again, it's not a long-term strategy. It's a tactic for now to be better positioned to deploy into more profitable assets when we feel the circumstances and time are right. So hopefully that gives you a little bit more clarity as to what my thinking is. And again, we remain poised. Megan, our splendid the Director of Client Communications and videographer, just winced at the alarm that went singing on by, but I think she'll probably leave it in, won't you, Megan? So again, our objective is really just is to maintain value in family wealth and avoid risks and remain flexible and liquid enough to pounce when we see opportunities emerge that are favorable, as I am convinced they will. And I said when things turn, and I think now all the hair is out of this bear market yet, but eventually things will turn and we will see spectacular returns of which I'm convinced. So I appreciate your patience with us and hopefully greater understanding that I've shared this as we await those opportunities, which we don't think are quite there yet. And again, I want to thank my friend and long-term client for giving the impetus to communicate with you more regularly. Thank you so much for now, and won't be so long before the next one. Thanks, guys. Bye-bye.